Welcome to WealthNest, your home for traders, thinkers, and financial freedom builders. Whether you're just starting out or sharpening your edge, you're in the right place. Be sure to subscribe, like, and turn on notifications so you never miss a powerful insight. Just a quick heads up, all content here is for educational purposes only. Nothing shared is financial advice. Always do your own research and manage your risk wisely. In the vast ocean of the financial markets, a stark reality exists. A small fraction, the top 1%, consistently pull profits from the water. The other 99% struggle, caught in currents of hope, fear, and confusion. They often end up feeding the very system they hope to conquer. What creates this massive gap? It is not a secret algorithm or a hidden tool. It is not about having more intelligence or a faster internet connection. The difference is not external, it is entirely internal. The dividing line is drawn in the mind. The 1% have cultivated a mindset that allows them to operate in a state of objective clarity, free from the emotional turbulence that sinks the majority. The average trader enters the market with a gambler's heart. They seek the thrill of a big win, the rush of a correct prediction. They see charts as a slot machine, pulling the lever with every click, hoping for a jackpot. This approach is fundamentally flawed because the market is not a casino. It is a dynamic environment of probabilities, not certainties. The 99% personalize market movements. They feel personally attacked when a trade goes against them, and believe they are geniuses when it goes their way. This emotional roller coaster makes consistent, rational decision-making impossible. They are not trading the market, they are trading their own feelings. In stark contrast, the elite trader approaches the market like a scientist or a business owner. They understand that they are not there to predict the future. They are there to execute a well-defined plan with unwavering discipline. Their goal is not to be right on any single trade, but to be profitable over a series of trades. They have accepted the inherent uncertainty of the market. They know that losses are an unavoidable part of the business, just like expenses in any other enterprise. This acceptance frees them from the emotional grip of fear and greed, allowing them to act in their own best interest without hesitation or regret. This fundamental difference in perspective is the source of all success. The 99% are searching for a magic signal or a perfect indicator that will eliminate risk and guarantee profits. They are looking for something outside of themselves to make them successful. The 1%, however, know that the key is not in the charts, it is in their head. They have done the hard work of building mental fortitude. They have trained themselves to think in probabilities and to execute their system flawlessly, regardless of how they feel. They have mastered themselves, and in doing so, they have mastered the art of trading. The three pillars that support the entire structure of an elite trader's career are discipline, patience, and professionalism. Without these, even the most brilliant trading strategy will crumble. Discipline is the engine of consistency. It is the ability to follow your rules without exception, day after day. It means taking every valid setup your system presents, even if you just had a losing streak. It also means staying out of the market when your rules tell you to, even if you feel a strong urge to trade. Discipline is not a part-time commitment. It is an absolute requirement for every single action you take in the market. Patience is perhaps the most misunderstood virtue in trading. Most people think patience is about waiting for a losing trade to turn around. That is not patience. That is hope. And hope is a recipe for disaster. True patience for a professional trader is twofold. First, it is the patience to wait for the perfect setup. It is the ability to sit on your hands for hours or even days until the market presents an opportunity that meets every single one of your strict criteria. Second, it is the patience to let a winning trade run its course, to allow your strategy to work without prematurely cutting your profits out of fear. Treating trading as a profession is the mindset that ties everything together. A professional shows up every day prepared. They do their homework before the market opens. They review their performance, study their past trades, and work on their weaknesses. They do not trade on a whim from their phone while waiting in line for coffee. They operate from a dedicated workspace following a structured routine. They understand that trading is a business of managing risk and executing a plan, not a hobby for chasing excitement. This professional approach removes the emotional highs and lows and replaces them with steady, methodical execution. The average trader lacks this foundation. Their discipline is fragile, breaking at the first sign of fear or greed. Their patience is non-existent, They jump into mediocre trades out of boredom or a fear of missing out. They treat trading like a lottery ticket, not a serious business. This is why they fail. The market is the most competitive environment in the world. It will ruthlessly exploit any mental weakness. The 1% succeed because they have built an unshakable foundation of discipline, patience, and professionalism. They are not just better traders, they are better business operators who happen to trade. Many aspiring traders believe the path to success is paved with complex indicators and proprietary signals. They clutter their charts with moving averages, RSI, MACD, and Bollinger Bands, hoping these lines will reveal the market's next move. While indicators can be useful tools, the 99% use them as a crutch. They look for a simple crossover or an oversold signal to tell them when to buy or sell. This is a shallow level of analysis. Elite traders, the 1%, look past these surface-level signals. They have trained their eyes to see the underlying architecture of the market, price structure, liquidity pools, and the footprints of institutional activity. Price structure is the true language of the market. The 1% trader reads the story told by highs and lows, by consolidations and expansions. They identify where the market is in a trend and where it is ranging. They understand that the market moves in waves, driven by the collective psychology of its participants. They see patterns of buying and selling pressure not as random noise, but as a coherent narrative. By understanding this structure, they can anticipate areas where the market is likely to turn or continue, giving them a significant edge over those who are simply watching an indicator line cross another. Liquidity is the fuel that moves the market. Elite traders know that large institutions cannot enter or exit positions without causing significant price shifts unless they do so at levels where there is a high volume of orders. These areas, often found above recent highs or below recent lows, are called liquidity pools. The 1% trader thinks like a predator. They ask, where is the money? They identify these zones where stop-loss orders from retail traders are clustered. They understand that the market is engineered to move toward these pools of liquidity, and they position themselves to take advantage of these moves, rather than becoming the fuel for them. This focus on institutional activity is a critical distinction. The 99% are playing a game against other retail traders. The 1% are playing a game where they try to align themselves with the smart money, the banks, hedge funds, and large financial institutions. They analyze price action to determine where these large players are likely accumulating positions and where they are likely to distribute them. They are not trying to fight the giants, they are trying to ride their coattails. This deep understanding of market mechanics, structure, liquidity, and institutional behavior is what separates a professional from an amateur who is just clicking buttons based on lagging indicators. No pilot would dream of taking off without first completing a thorough pre-flight checklist. The same professional rigor applies to elite traders. They do not enter a trade on a whim or a gut feeling. Every single trade is a calculated business decision, vetted against a strict set of criteria. Before risking a single dollar, they ask themselves a series of critical questions. This systematic process removes emotion and ensures that every trade aligns with their overarching strategy and risk management plan. It is a deliberate, conscious process that stands in stark contrast to the impulsive actions of the average trader. The first question is always, does this setup meet every single rule of my trading plan? This is a simple yes or no question, with no room for ambiguity. The trading plan contains the trader's edge, their proven formula for extracting profits from the market over the long term. If even one criterion is not met, the trade is a non-starter. There is no close enough or it almost fits. This rigid adherence to a predefined plan is the ultimate form of discipline. It protects the trader from their own worst impulses, such as boredom, greed, or the fear of missing out on a move. Next, they ask, where am I wrong? This is a crucial mental shift. The average trader focuses only on how much they can win. The professional trader is obsessed with risk. They define their invalidation point, the price level at which the trade idea is clearly proven wrong, before they even think about their profit target. This determines their stop-loss placement. They know their exact risk in dollars before entering the trade. This focus on the downside ensures that no single trade can ever cause significant damage to their account. They are, first and foremost, managers of risk. Finally, they ask, is the potential reward worth the risk? This is the risk-to-reward ratio. A professional will not take a trade unless the potential profit is significantly larger than the potential loss, often by a factor of 3 or more. They know that since losses are inevitable, their winning trades must be large enough to cover the losses and still produce a net profit. They are not interested in flipping a coin for a 1-to-1 payout. They are looking for asymmetric opportunities where the odds are heavily stacked in their favor. Only when all these questions are answered satisfactorily do they proceed to execute the trade. Success in trading is not born from moments of genius, but from the relentless execution of a robust system. The 1% of traders are not smarter, they are simply more systematic. They understand that human emotion is the enemy of profitability, and the only defense against it is a well-defined system that governs every action. This system is composed of 3 interconnected parts: a daily routine, a strict set of trading rules, and a commitment to flawless execution. This framework provides the structure needed to navigate the chaotic market environment with a calm and objective mind, turning trading into a methodical process rather than an emotional gamble. A professional trader's day begins long before the market opens. They have a pre-market routine designed to prepare their mind and their strategy. This might involve reviewing overnight market movements, identifying key levels of interest for the day, and reading through their trading plan and psychological reminders. This routine primes them for a state of peak performance. It is like an athlete's warm-up. It gets them focused and removes any lingering emotional baggage from the previous day or their personal life. By the time the opening bell rings, they are not reacting, they are prepared to execute. The core of the system is the trading plan, which is a detailed document containing a strict set of rules. These rules are not arbitrary, they are based on extensive research, backtesting, and forward testing. They define exactly what constitutes a valid trade setup, including specific criteria for market structure, entry points, stop-loss placement, and profit targets. The rules leave no room for interpretation in the heat of the moment. The plan is the trader's boss. It tells them when to trade and when to sit on their hands. For the 1% trader, violating these rules is simply not an option. Flawless execution is the final piece of the puzzle. Having a great plan is useless if you cannot execute it properly under pressure. This is where discipline meets practice. The elite trader has trained themselves to execute their plan without hesitation or second guessing. When a setup that meets all their rules appears, they take it. When their stop loss is hit, they accept the loss immediately. When their profit target is reached, they take their profits as planned. There is no emotional interference. The system is the savior because it separates the decision-making process from the emotional experience of being in a trade. Ultimately, the journey to becoming an elite trader is a journey of personal growth. The market is a mirror that reflects all of our internal flaws, our impatience, our fear, our greed, and our lack of discipline. You cannot conquer the market until you have conquered yourself. The 1% understand that trading is an inner game. Their primary focus is not on predicting the market but on managing their own thoughts and emotions. They know that a calm, disciplined mind is the most valuable asset a trader can possess, and they work on cultivating it every single day. One of the most powerful tools for mastering the inner game is the trading journal. This is far more than just a log of wins and losses. A professional's journal is a deep dive into their own psychology. For every trade, they record not only the technical details, but also their emotional state. What were they thinking and feeling before, during, and after the trade? Were they patient? Were they fearful? Did they follow their plan perfectly? This practice of self-reflection allows them to identify patterns in their behavior, pinpoint psychological weaknesses, and consciously work to improve them. The elite trader has a unique relationship with losing. The 99% see losses as failure and a personal blow to their ego. This triggers negative emotions like anger and frustration, leading to destructive behaviors like revenge trading. The 1%, however, view losses as feedback. They are simply an expected business expense and an opportunity to learn. After a loss, they do not get angry, they get curious. They go to their journal and their charts to analyze what happened. Was the loss a result of a flawed strategy? Or was it simply the result of random probability playing out on a valid setup? This objective approach neuters the emotional sting of losing. This commitment to personal development is what truly sets the 1% apart. They understand that becoming a great trader is not a destination, but a continuous process of self-improvement. They are lifelong students of the market and, more importantly, of themselves. The discipline, patience, and emotional control they build in their trading spills over into all other areas of their life. So, as you begin your own journey, remember this. Your goal is not just to make money. Your goal is to become the kind of person who is capable of making money consistently. Focus on building the mindset of the 1%, and the profits will inevitably follow. Thanks for watching today's video on WealthNest. I truly hope you found value in it. So what was your biggest takeaway? Let me know in the comments. If this helped you, just smash that like button, subscribe, and tap the notification bell so you never miss the next trading insight, tool, or tip. We're building a focused trading community, one smart decision at a time. WealthNest, build, trade, grow.